Private equity is a growing market, accounting for more than $5.3 trillion in assets under management, and is expected to almost double by 2025. It's an attractive asset class for a broad range of investors, as it can boost the performance of their investment portfolio and provide diversification. A private equity manager is the term given to a firm that invests in private companies and then works closely with the management of those businesses to grow them over time. This tight governance approach leads to much shorter communication lines between company management and the investors, and means that private equity managers can adopt a much more active approach to enhancing the value of their investments. In the first instance, the private equity manager will raise a fund and invite institutional investors such as pension funds, insurance companies, charities and high net worth individuals to pool their capital in a single fund that will then be invested in a select number of opportunities. Once the fund has been raised or closed, the private equity manager will start seeking out opportunities to invest on behalf of investors, typically taking a significant or influential stake in businesses that are privately owned, have leading positions and a sustainable competitive advantage in attractive market segments, offer the potential for substantial value creation over time, and can therefore be sold for a higher amount than the original investment at a later date. Private equity managers are often experts in different industry sectors and geographies, using their knowledge and experience to identify opportunities and create value in their portfolio companies. ESG matters too, and private equity managers recognise that ESG is a fundamental driver of value. Reducing waste, increasing efficiency, improving workforce relations and enhancing reputation. The best private equity managers source attractive investment targets through extensive research and exclusive networks, conduct deep commercial, legal and ESG due diligence on every investment opportunity, invest in businesses for the medium to long term, typically between 4 and 7 years. Help to manage those businesses through different economic cycles. Use debt sensibly and responsibly. Position a company for sale once the growth plan has been achieved. Private equity managers typically invest in businesses alongside existing management teams to ensure their interests are aligned, and they work closely together to grow the business and increase its value over time, establishing robust financial controls and optimizing capital structures, reviewing product ranges, evaluating go-to-market strategies, and accelerating digital adoption, improving facilities, enhancing the supply chain and optimizing procurement, developing existing talent, recruiting specialist resource, and strengthening core functions, improving processes and creating greater efficiency through digitization, investing in research and development, extending existing product lines and expanding outside core markets, consolidating fragmented markets and expanding into new geographies through strategic M&A. Once a private equity manager has achieved the target set out at the start of their investment, they may decide to sell their stake in one of 3 key ways: selling the business to another company, selling the business to another private equity manager, or by floating the company on the stock exchange. Due to their expertise and hands-on approach, the best private equity managers are capable of generating returns that can outperform the public markets over the long term. And they can provide access to companies and niche sectors that are typically not available via the public markets. However, the barriers to entry are high, and the best private equity managers and the most exciting private equity deals are often beyond the reach of most retail investors. But that is where PIP comes in. PIP is an investment trust listed on the London Stock Exchange. It's been managed by specialist asset manager Pantheon since inception in 1987, and over that time has grown by an average of around 12% per year, significantly outperforming the MSCI World Index. Through PIP, investors can access a well-managed, globally diversified portfolio that includes many of the world's best private equity managers. And they can access a portfolio managed by a responsible investor, Pantheon, which holds sound ESG principles close to its heart. And because PIP shares can be bought and sold like any other listed company, retail investors can benefit from the administrative simplicity and liquidity, while PIP does all the hard work. PIP's mission is simple: to make the private public. PIP, a leading FTSE 250 private equity investment trust.